David Morgan with you for the weekly perspective. Well, one of the most important things to come out this week is that banks must face the U.S. gold rigging lawsuit, and UBS was dismissed. You can look this up. This is from Reuters. There's been several articles about this. I won't belabor the point, but it's an interesting situation. We'll see this time if anything changes. Personally, I doubt it. Manipulation is very difficult to prove, but time will tell. And another big news item for this week, of course, was the flash crash on the sterling, hitting like a 31-year low. This is from investing.com. It gives a market overview, looking to the non-farm payroll numbers coming out. And I won't read the whole article. It's one that you could definitely look at, talking about what took place, what's anticipated, and of course what's going on with the Japanese yen, US dollar, Aussie dollar, British pound, and Singapore. So that's something to look at. Again, very interesting what took place in the sterling this week. And of course, further in the news is what happened in the gold and silver prices this week as they got smashed and the waterfall decline. Doing this on Friday morning, and the big question, of course, is it over or will it continue? This came out on CNBC a few hours ago regarding the physical gold demand will limit the price decline. I think the worst is over, and I'll go through that in my own chart here very shortly, and we'll call it a wrap. And briefly for this year from April on, what we witnessed was a low here in April, early April, a big move up from the $15 level up to about $17.75, and then a pretty hard sell-off pretty rapidly down to about the $15.75-16 level. And then from that level up, consolidation, and then boom, we made it up all the way to about $21. Been consolidating ever since. I said we'd either break out to the upside or the downside. I was favoring a correction for the Morgan Report website members, and lo and behold, we got it, and we got it quickly. This waterfall decline is now hovering around the 1750 level, which is this area over here, which is support. Will it hold or not remains to be determined. It's certainly been below the 1725 area or so, but it may find support there. Certainly we're at the 200-day moving average, another area of usual support. And the overall trend line really hasn't been broken that badly, especially if you draw a different one, which is here in the red, which is the 200-day moving average. Again, I think it's probably the worst over for now. If this area breaks through to the downside, then 16 has got some support here, as we saw earlier in the year around the early June timeframe. So that's going to be a wrap for this weekly perspective. I'll be back with you next week.